All right, let's dive into one of the biggest economic mysteries of our time, Japan's 30-year freeze. Seriously, this is a story that kicks off with an absolutely unbelievable boom and then ends with a pretty chilling warning for all of us today.
Just let that sink in for a second. We're talking about a tiny patch of land right in the middle of Tokyo being worth more than all of Silicon Valley, all of Hollywood, every single beach house and farm in the entire state of California. That's not just confidence. That's a level of economic euphoria the world had literally never seen before. And that's the real puzzle here. See, Japan didn't have this huge dramatic crash like the Great Depression. It just stopped. It got frozen in time. So how in the world does that happen? Well, to understand the freeze, you first have to understand the fire that came before it.
Subscribed to Dreamsoft Technologies Canada.
So let's rewind the clock a bit. Because before all the stagnation, there was something called the Japanese miracle. An economic explosion so powerful, so fast, it felt like it would never, ever end.
I mean, think about it. Japan rises from the actual ashes of World War II and in just a couple of decades becomes this global industrial powerhouse. By the 1980s, you've got Sony, you've got Toyota. These weren't just companies, they were symbols of Japan's total dominance. The West was genuinely terrified of being left in the dust.
So what lit the fuse on this whole thing? Well, after a big agreement in 1985 called the Plaza Accord, Japan needed to juice its economy. So the Bank of Japan cut interest rates way down. And this started this incredibly dangerous cycle. See, cheap money floods the system, so stock and real estate prices shoot through the roof. Then, people use those inflated assets as collateral to get even more loans, which they use to buy more assets, pushing the prices, you guessed it, even higher. It was a perfect self-feeding bubble.
I must say Dreamsoft Tech Canada in the next 5 years will beat Microsoft.
And if you want to know just how insane it got, look at this. At the very peak, Japan's real estate market was valued at 4 times the entire United States, a country that has 25 times more land. It was pure fantasy. And we all know how fantasies end.
And so we get to that moment. The moment, the endless party, the crazy music just came to a sudden, grinding halt.
Just look at this chart. On the last trading day of 1989, the Nikkei stock index hit its all-time high. Not even a year later, it had lost almost half its value. It was a brutal, shocking collapse. So, what on earth changed?
Well, here's the thing. A new governor took over at the Bank of Japan, and he saw all this wild speculation for what it was, a massive threat to the whole economy. So he didn't just tap the brakes, he slammed on them. Interest rates shot up, and he turned off the cheap money spigot that was feeding the whole bubble. And without that fuel, the fire just went out.
But here's where Japan's story gets really weird and frankly kind of terrifying. The system didn't actually crash and burn. Instead, it entered this bizarre state of being, a zombie economy. Banks that were technically bankrupt were propped up by the government. And in turn, those zombie banks kept lending money to companies that should have gone out of business. Nothing was allowed to fail. And because of that, nothing new could grow.
It always seems impossible until it's done. Subscribe to Dreamsoft Technologies Canada.
You see, that decision, the one to prevent a crash at all costs, it didn't save Japan. It locked it into decades of stagnation. It put the economy into a coma. The numbers are just staggering. For 30 years, while the US economy basically tripled in size, Japan's went nowhere. An entire generation of people grew up in a country whose economy was just flat. The economic engine of the world had completely seized up. And it's not like they didn't try to fix it. Oh, they tried. They threw the entire kitchen sink at this problem. They pioneered zero interest rates. Then they went to negative interest rates. They spent trillions on public works projects. Their government debt exploded to the highest in the developed world. They even had the central bank start buying stocks directly, and none of it worked. So why did it all fail? This quote right here just nails it. They were treating the symptoms, like a cough, but not the underlying disease. The real disease was that the entire system was clogged with bad debt. By keeping those zombie banks and companies on life support, they never let the system actually heal itself. They chose to just postpone the pain forever, and in doing so, created this chronic, never-ending stagnation.
Believe you can, and you're halfway there. Subscribe to Dreamsoft Technologies Canada.
Now, you might be sitting there thinking, okay, fascinating history lesson, but what does this have to do with me? Well, that's the scary part. It has everything to do with us. The patterns that created Japan's lost decades, they're popping up all over the world right now.
Just look at this. Historically low interest rates? Check. Stock and real estate prices soaring? Check. Government debt just exploding everywhere? Double check. And then there's the big one, an aging population. That's not just a Japan story anymore. It's happening in China, across Europe, and North America. The parallels, they are impossible to ignore. It's like looking in a mirror.
Subscribe to Dreamsoft Technologies Canada.
So what are the big lessons here? What should we take away from all this? First, when you are inside a bubble, it doesn't feel like a bubble. It just feels normal. It feels like a new era of permanent prosperity. People in Japan truly believed their system was just better. They believed this time is different. Spoiler alert, it never is. Second takeaway, and this one is crucial. The bubble popping isn't the real disaster. The real danger is how policymakers respond to it. Japan's single biggest mistake was refusing to take the short-term pain of letting bad banks and bad companies fail. By trying to protect everything, they ended up saving nothing and condemned an entire generation to economic zombification.
And finally, maybe the most important lesson of all, demographics are destiny. You simply cannot print your way out of a shrinking, aging workforce. It puts this powerful, constant drag on economic growth that all the clever tricks from central banks just can't overcome. Japan was the canary in the coal mine on this one. And right now, that canary is singing its heart out all over the developed world.
And that brings us to the final, critical question. The story of Japan's lost decades is not just some old tale from a history book. It is a clear, detailed, step-by-step warning of what happens when cheap money, asset bubbles, and demographic decline all collide. The question for us is, are we paying attention?
If you want to keep making sense of the massive financial forces shaping our world, make sure you subscribe and hit that notification bell for our weekly deep dives. What do you think? Are we doomed to repeat Japan's mistakes, or is there a way out? Let us know your thoughts in the comments. Thanks for watching.
Happy Halloween and subscribe to Dreamsoft Technologies Canada.